Hello traders and viewers. It's 12th of March 2015. Crude markets, a 4-hour chart. Alright, now let's do some in-depth technical analysis. We are people who trade moving averages, crosses, the 10 moving average and 20 moving average. Our key support trend line from the lows has been broken, and yesterday we drew this trend line here, which is, you can see, it's still valid. See that? Lower lows, lower low, lower low, lower low, and lower low. Lower highs, lower highs. Market is trending towards the downside. Let's see if we can have a channel. Sort of a channel. Alright. Now there's a bearish cross on the 4-hour chart. Let's see on the daily chart as well. Bearish cross on the daily chart as well. But here's the issue. The reason why we were not short selling is, I explained that we are in a sideways trading range of last month, and we were at the lows of that range. There was a strong support that was coming from this area, which yesterday tried to hold it, but it didn't. The price wasn't held here properly. And even today, if you see the current 4 hours that are into play right now, the market is still bearish, so we might break the previous day's low. Guys, the key point to keep under consideration is below the previous day's low, always the sellers are in charge. Above the previous day's high, the buyers are in charge. Yesterday we did make a real low. See, look at this. I did take a buy here. I'll explain that. I'll come to that later. But you see, the market tried to reverse here. Buyers are trying to push it back. Okay, and during the London session or prior to the London session, they failed to break above the previous day's lows, so buyers couldn't really take control. Now let's see a follow through today. If we get a lower low today as well, then the bears are in control. You need to short sell the pullbacks. To when the price of pullbacks means when you go down, the price pulls back towards the moving averages and you still have the cross is valid, you enter a short sell trade. Alright, that's one of the trading strategies for today. Or what you can see is maybe there's still some support left here. Maybe the buyers have some gas left in the tank. Alright, so probably look for a reversal pattern here. This is your swing high. Above this or above this, you could take a buy position and continue towards the upside. If you are in a buy trade, these trend lines could be your next targets. Now highs of this wedge, you have a wedge pattern previously. Highs of this wedge or this trend line support, what support becomes resistance, remember? So you can take your profits here if you are in a buy trade. Otherwise, what you could do is let the price pull. If the bearish cross on daily chart is still valid, look for a pullback towards this trend line, highs of the bear channel, or towards this area, and look for a moving average bearish cross and re-short sell. The other fundamental reasons, I don't like to discuss fundamentals because I'm purely a technical trader, is dollar index, like I explained yesterday, is strengthening in value. So that is, I think, what's pushing the crude oil further down. But technically speaking, we had a bearish cross. Mechanical rules, you follow the rules and just do the trading. We had a bearish cross already, and this is a 4-hour chart. Bearish cross. We should have I should have short sold, but I did opposite. But yes, yesterday's one trade was successful. Today I took another buy from the lows that turned out to be a failing trade. So total net profit and loss is 0. Yesterday I made 120, today I lost to 120. But anyway, just hold on. Okay, let's switch to our day trading chart. 30 minutes is what day traders would usually use. Now we've got some support. This is, you can see the effect coming in from this trading range. If we fail today to break the lower lows, to make a new lower low or break below these lows, then definitely means we have to break this high and continue to trend towards the upside. Yeah, I hope that sounds reasonable. You can even mark these highs, and you can mark these lows, and you can mark this high and this low as well, because these are going to be your critical areas. So let's measure this range. This range is about 170 points, 170 pips, 1.7%. Nothing bad. But at the same time, guys, you have to understand we have fallen from 52 back to 47, which is about how much? 51, 50, 49, 48, 47. $5. We've dropped $5. So expect some reversals. Whenever you have collapse, of course, last time this rule didn't work out, but whenever you have a collapse of $5 or something in the oil, 5 to 10, 5 to 7, expect some reversals, expect pullbacks, expect corrections. There are minor corrections here, but let's for you really have to train your eyes now. You have to be, actually these are some serious days to make money here, because anytime a market can reverse and go back to 60s and 70s. But look for these kind of price actions. Look at the lows stabilizing, buyers taking control, reversal pattern. Try to learn the reversal pattern and moving average cross. So when you have these things supporting and in your favor, definitely the trade should work out. Okay. Sometimes what I really do is, I call it a stubborn strategy. For example, this is 48.75. I would take if all the mechanical rules are in favor, I would take a breakout towards the upside. All right. And if it stops me out and the rules are still valid, I would re-enter the same entry. I did that yesterday, and the results are posted on Instagram. I took a buy at 48.35. I got stopped out, then I took at 48.36, and I made good money on it. I think it was 48 and 48.06. But I don't know. You can go through my Instagram page and find out the results. So let's try to summarize quickly. We were at the lows of the trading range that we identified from our bigger time frames, such as 4-hour chart and daily chart. That's why I didn't want to short sell. Okay. Now I'm looking for moving averages on bigger time frames to show a bullish curve, and I want to buy. Otherwise, if I see new lows, I'll short sell the price. Short sell. I would enter a short sell entry at a pullback around the moving averages, as long as the bearish cross on major time frames is still valid. All right. So that's my opinion for today. That's my advice. Hope the video helps. If you have any questions, feel free to ask. If you're day trading, keep your stop losses very tight, 10 to 30 points. That's it. If you're trading an investor style using very small lot size, like 0.25% of your equity per 100 points, then you don't need a stop loss. You can hold the trade, but enter at good places. It won't blow your account. Investor style trading strategy doesn't blow up your account, but you can have a hard time for a long time. So in summary, just do it at a good place, like at the lows of this range, buy at these lows of the bull channel, or take nice breakouts of the trend lines. That's how you should take a trade. But yeah, hey, but just keep in mind, this trend line is still valid trend line. We try to break above it. So in reality, what you can do is, if there are no lower lows, you can also consider this trend line as your resistance and a breakout towards the upside, and use this trend line as an entry. So what you're gonna do is, basically, when the market reverses from these lows and approaches this trend line, okay, you can keep a buy stop order above this trend line. Alright, so hope the video helps. If you have any questions, feel free to comment in the YouTube video, under the YouTube comment section, or ask me on Skype. You can also WhatsApp me, and yeah, you can even leave a comment in my blog. Have a great trading day. Have a great trading week. Bye bye for now.